All right, so let me just break this down real quick in terms of PO3. I do have a lot of webinars in the group on this, but today I want to talk about a special type of PO3. So let's just talk about the basics real quick. PO3, if you're looking for a bullish candle, you want to see it open up with accumulation. And this is everything. It could be daily, could be 1 minute, 1 second. All candles are the same. They all work the exact same. They all fractal. They just take different times to form. Some will take longer to form than others. So if price goes sideways for a bullish candle, you want to see it open up. You want to see it take a dip. Now the dip could be down here. It could be up here. But then you want to see it swing back up, right? And then hold bullish order flow. That's a bullish candle. Close a small retracement. So sometimes it could just look like this. Sometimes it might look like this. Still a bullish candle. This is a doji for people who don't know. That's a doji, right? You see the open up and then the body's getting, that becomes a wick. For a bearish candle, you got here, up, down, close a small retracement. So same thing, could be that, could be this. Bearish candle, right? So the ICT everything indicator for me, it helps me to see like where we open at and how these sections make up a candle. Like between these gray lines are a daily candle, really between here. So this is the thing. ICT teaches us to use the 12 a.m. open. So that would be the gray line here. So if you don't have your chart set up like I do on ICT everything indicator, I have a video in the group in the start learning here section. It's the first one for a reason. It's the indicator video. It'll show you my settings and how I use this and everything. Cause this, if they delete this indicator, I have to remake it before I could take another trade. That's how important it is to me. So like this candle, it opens up, it take a little dip, play around, and then it swings higher and then boom. And then it come back up and it closes like above the 12 a.m. right here. So this kind of like a doji, but it's like a bearish doji. So like here, this is a perfect example of a bullish candle, right? It opened up, it take a dip, and then it just holds bullish order flow, right? That's a bullish candle. This is a doji. It opened up, it go higher, it go lower, it go higher, it just stay around the 12 a.m., close around 12 a.m. Basically, it's a doji. Same thing here. And this is an exercise y'all should be doing in your own time. Just going back and doing this. Like this, it went down, it went up, and then it's a bearish candle. Boom, right? So then you can go back and you can see, okay, that's the daily profile. Let me go in here at the trading times to see, do I have a time frame correlated market maker model? This is how y'all supposed to back test. You do this and then you go back at the times you trade and see, okay, what were the key levels? What was the correlation? You should not be using 930 as the open. But I'm gonna talk about that. I'm just trying to show people these examples. Like here, bearish candle, close bullish, doji. This bullish candle opens up, goes below where it opens, the 12 a.m., the red dotted line, distributes higher, closing small retracement, bullish candle. Same thing here, ugly bullish candle, but it's a bullish candle. Opens up at 12 a.m., see the red dotted line here, opens up, play around a little bit, take a huge Judah swing, back up. At this point, price is a doji. Once it extends higher, now it's a bullish candle. All right, same thing, opens up here, it just kind of drops and then holds bearish order flow, bearish candle. All right, so there is a thing, right, where Asia will move a lot. So let me try to find a good example. All right, so these are tough examples, but look, when this thing moved like over 50 points, how many points is this? It's on the Nasdaq. This 82 points. So when it moved like this, right, ICT teaches us the true 12 a.m. open. She said, what do I watch that explains in detail? I promise I find a daily profile during New York session. So now it makes more sense. Yeah. No, the daily profile is all. That's why you need the ICT everything indicator. Your charts need to be set up exactly like this. Like if we do one-on-ones with people, this is the first thing I'm doing is making sure they chart set up like this when it comes to like the chart stuff, because it shows you New London session, New York pre-market, New York section, New York lunch session, and New York PM session. All of these sessions are equally important. This one in the middle, that's white. This one right here, this one, and this one. They're all equally important. because they're all session liquidity. So if you see how price ran the pre-market high right here and then reversed, and then it ran New York low there, boom, boom, boom. You see the lunch session low right here. This is the lunch session between 12 to 1:30. You see how it runs this low there, and then it starts to reverse. So these sessions are super important. So on this Asia session, price technically opens up for the new day at 6 p.m. right here. It cuts off at 5, opens up at 6, right? So this for like the electronic trading hours, right? The regular trading hours is what like are the real stock market hours, I guess. Electronic hours, they put that in when they made trading electronic so it appeals to everybody. So everybody around the world can trade basically. Because like the London, like if you click on RTH right here, watch what happens. All this shit disappear. Like you just have New York session, right? 9:30. And then you have lunch and then PM session. Like that London session and all that, that's not real. It's all fabricated so people can have a chance to make money. Or actually it's fabricated so people can go in there and lose their money, but it's not real. So when you have this big ass Asia session like this that opens up at 6 p.m., right? So let's open up right here at 6 p.m. Let me just put a line on here so y'all understand what I'm about to tell y'all. 6 p.m. this candle right here. This is the 6 p.m. open. So why not use the 9:30 daily open as well if you only trade RTH? Because that's not. I'm explaining it to you. So this is the 6 p.m. open right here. ICT teaches you to use a 12 a.m. open right there. So let's put a line on these. Let's take this off. All right. So 12 a.m. opens right here. Right. So you see, if we were just to go off the 12 a.m. open, y'all can still see my charts, hopefully. Let me make sure. All right. So if we was just to go off the 12 a.m. open, this looked like a bullish candle, don't it? Like y'all see how it opened up at 12 a.m. It went down. It drew the swing up. We above the bullish. I'm not talking about how it closed. Let me see. Can I bar replay this? Right there. Well, let's actually even go back further to the times that we actually trade. So let's go like right there. That's 10 o'clock, 10:15. So what this look like, y'all? This look like a bullish candle, right? Easily a bullish candle. It opened up at 12. We took a Judas swing. We come back up. We above the 12 a.m. open. This look like it's just gonna do that, right? That's the 12 a.m. But then the 6 on a 6 p.m. candle, this is technically still a bearish candle. So now you got the 6 p.m. candle as bearish, but you got the 12 a.m. candle as bullish. So if you click on your higher time frame PO3, you're going to see this on, it'll be just like this on the indicator. But if you click on the daily chart, it's going to look like this. So when it's like that, I'm not trading, bro, until they both get on the same page. Either, let me take this off real quick. So this is kind of the 12 a.m. open here, and this is the 6 p.m. So they both got to align. Either this 12 a.m. open, it got to do this, like come back up and then get down, align in line with this one. So I'm just both taking shorts, or I got to wait because this is a bullish candle right now, but this is a bearish candle. So I got to wait for this bitch to align and get up here, because now they both will be bullish candles. Does that make sense to everybody? If that don't make sense, ask me, because that needs to make sense, because those are going to be my non-negotiable trade days. Because ICT teaches the 12 a.m. I've been using the 12 a.m. for 3 years, and we haven't always had this crazy amount of volume in London, not London, but Asia, and we usually don't. Price is manipulated when we do, because let's just scroll back through it just to show y'all the differences. So we got a little decent range here in Asia, right? The 6 p.m. is what, up here. So look, this is a bearish candle, right? That's a bearish candle. Same thing with the 12 a.m. While it's above it, it's a bullish candle. So I wouldn't, in this area right here, I'm not trading, right? Because the 6 p.m. open is up here, so it's a bearish candle, but the 12 a.m. open is right here, so it's bullish candle. So I'm not trading in that area. Y'all see the X's, how they X each other? Again, bearish candle, right? Bearish candle, bullish candle. I'm not trading in this area until they both align. Now we go up here, we run liquidity, we got SMT. Okay, they start dumping below 12 a.m., 6 p.m. They both bearish candles. That's when I would trade. But we in 4-hour bullish level, so I'll just probably no trade day it. You know what I'm saying? Now let's go right here. Y'all see we don't have no crazy ass range right here. Like price basically start in here somewhere, right? Bullish candle right here. We open up 12 a.m. is bullish candle. By the time it get time to my trade time, we both bullish candle above 6 p.m. and above 12 a.m. I'm good to go here. You know what I'm saying? Even though this day was such a bitch because it just opened and ran, I'm good to go there. Let's keep scrolling. This got a little bit of a range down here. Open up 6 p.m. Technically a bullish candle, right? By the time we get to trading, it's still bullish because it's still above the 6 p.m. But on here, by the time we get to trade, look where it's at. It's bearish. So look what the candle is. A doji all day. Get your ass chopped. I wonder if I could have both times on that PO3 indicator. Do not do that. 100% do not even check for that. You need to go look for it yourself, because if you have, you can, it's a way, what you have to do, Joe, you have to do this, bro. I'll be honest with you. Which I guess is not bad. It's always better to go look, but what you gotta do is you gotta click on it. Hold on. And you gotta turn this off right here. It should always be on. But what I'll be doing now is I'll click it on and off just to see, okay, because the candle going to flip over there. It's going to change. It's going to do it from 12 a.m. It's going to do it from 6 p.m. If you take this off, it's going to do it from 6 p.m. So if them candles not the same, when I click this on and off, I'm not trading until they get the same. That's how you do it. Or you just have this on as normal, and then you just click on your daily chart and see if the daily candle is the same as the daily indicator. Because that is not a 99% chance you're going to get chopped. You're going to have a day like this if that's the case, if they're not the same. And I've done the studying over the last week, 2 weeks, been observing it. I went back, looked through trades. This is exactly what happened every time I lost. I'm not going to lie. These be different, like 12 a.m., boom, boom. And you wonder why I always be saying, like, why price is harder to trade between 12 and 8:30. Because usually when Asia session be like somewhere crazy and this over here, you'll be like, look, this is the 8:30 open right here. This is the 12. So that usually be happening when prices be stuck between them when we have these big ass Asian ranges. All this has been hard to trade because of that, right? But then let's go back in June before July. So you see like the open here, the opens right here, they not far from each other. Like easily can both be bullish candles, right? Until of course this happened in PM, but for our session, boom, Asia session, tight range. By the time it's time for us to trade, we above the 12 a.m. and we also above where we open at. So bullish candle on both, easy bullish candle for the day, right? You just go back and just look like the open 6 p.m. here, normal as hell. 12 a.m. open here, normal as hell. Bullish above both when it's time to trade until it pulled back, but in PM. So you see how much easier it is like to trade when the range not super big. Like this 6 p.m. Well, this one right here is a little bit tough, but they at least not going against each other, because this is a bullish candle, right? And then this is a bullish candle. You only run into problems when this is a bullish candle, and then by the time 12 a.m. it done did this, because now we bullish and bearish. You know what I'm saying? So we need to mark out 6 p.m. I wouldn't say to mark it out. You don't need to mark it out at all. You just need to be aware of it before you trade. If the daily candle and the daily profile is different, you're going to have a lot of chop until they get aligned with each other. So I don't say you need to mark it out, but you just need to pay attention to it. If you trade the same pair as I'm trading, I'm going to say it. So you really don't got to think that too hard, to be honest, because I'm going to say it. Like, because I know for sure I'm not trading if they different now. I'm going to always wait till they line up. So 6 p.m., same here. You see how it's a bullish candle. And then for 12 a.m., it's a bullish candle. So perfect. let's go. In line with it. You know what I'm saying? When they different, it's gonna fuck you up every time. Let me see, are they different here real quick? So this is 6 p.m. open, bullish candle, and then you got 12 a.m. open, becomes a bearish candle. So that could be a little tricky. But for the most part, it's like after the market close, you don't want to see this. You don't want to see no big ass boost at 6 p.m. I know your gambling ass might want to see it when you trade in like a London session. Not London, but Asia. But you don't want to see this. You don't want to see tradable price action in Asia, because it's gonna make New York so much harder. But when you see tight ranges, then New York don't be that hard to trade. So I'll probably do some more about that, and I'll clip up this part that I'm talking about, so you can just watch that part specifically without having to watch the whole class in the future if you want to go back to it. Let me look at some of y'all trades. Now I'm gonna explain the contest real quick, and then I'm up out of here. So 9:30 open, I don't use that for the daily candle. ICT says you shouldn't use that either. I don't know if y'all meant 8:30. Just I'm talking Eastern Standard Time. Y'all funny as hell though. Thinking I found a daily profile. Oh, you do it. Nah. So the difference with that, Nate, is like whatever it's time before price. So if we trade in a 950 macro and the profile is bullish, then you want to be in line with that. But if it's confusing, like if it's not clearly bullish, then you just don't want to be greedy. You want to, take low hanging fruit. Because when we say like daily profile bullish and we done trading in New York, that don't mean that the daily candle got to end like that. Just like if we like the weekly chart, for example, we don't need to know where the weekly candle is going to end up. We just need to know which way it's most likely to extend. So that way, day by day, we can trade in line with the expansion of the weekly candle. Why not use the 930 as daily open as well if you trade RTH? I only look for RTH on the gaps. I don't only trade RTH. I trade ETH. I just look for RTH for the gaps because that's what ICT say to do. And then also the 930 is only the open for indices. For like gold and like Forex, this 12 a.m. stuff is still apply. I'm kind of slow one more time. Okay, now get it. Okay. Yeah, now it's gonna take more time seeing it too. So it ain't just like, I know I be explaining stuff good, but you ain't supposed to just get it to click overnight. But you're gonna get it to click way faster probably than if you was like watching ICT videos or anywhere else, to be honest. But hell no, it ain't gonna be like that fast. The gaps you look for on RTH is relevant for. It's relevant because those be super magnets. So like if this is what ICT say, what the range, if it's lower than, like you can just see it. You can see if it's more than 100 points, I think he said, it's most likely to not go back to it, or maybe he said 180, something like that. But you can just see it. You see this big gap right here. Look how price eventually fills it. You see this big gap that we have right here. You see how price eventually fills it. We have a gap here. Price, I mean, it jumped over it, but it filled it. We have a gap. Let me spread it out some more. That diddy. We have a gap here. See how price fills it. We have RTH gaps, new week opening gaps, new day opening gaps. They are most likely to get filled unless they like super big like this one. It'll get filled, but not right away. So this is 200 points. That's most likely not to get filled. But if it's something small, like see right here, little gap like that. See how this candle filled it? Gap right here, not over 100 points. See how price filled it? So that's what they be important for. It's right here, filled it. So when you see that RTH gap, let's say you trade in New York, if it's not too big, you can kind of trade to it type shit. Or you can wait. It's the halfway point that you want to pay attention to, really. Like for instance, like this gap right here, the halfway point. See how it went back up, rebalanced the halfway point, and then melted? That's what you're really looking for on the RTH. Right here, got that. And then the next day, it filled it. So you got this gap right here. It didn't fill it that same day, but it eventually came back up right there to fill it. Got this gap right here. It went back to the halfway point on that same day. So you see it bounces out the halfway point of this gap right here. And then it starts to bounce back up. So that's what these be for. Like, see the gap right here? You see price go right here, halfway point, fill it, and then boom. So it kind of be like a little cheat code if you're new to it. I got a lot of classes on that too that I talked about way back in the day on that.